So as we were talking about wedges, what are wedges? Wedges create reversal structures. Let's just put it that way, simple. Okay, when wedges create reversal structures, at that point of time, we need to understand that whether the reversal is actually going to happen or not. Right. So if you look at this chart, how do we draw wedges? In a bull trend, when the market is trending in the bullish way, the wedges are drawn. The line that connects at least 3 points at the top is your top wedge. When the market is falling, when it's in a bearish pattern, at least 3 touches on the wedge will make the bottom wedge, right? So if I look here, if I try to draw a trend line here, this can be my top wedge, right? This is one. Whereas when the market was falling, this can be the bottom wedge, which failed and we went back up, right? Now, where are the wedges formed? If you see, the market turns at points of support and resistance, correct? There is nothing else that runs the market. The point of supports and resistance are the only things that keeps the market running, and based on that, if there is based on that, the market moves, and in case there is any news, in that case that move is simply accelerated. You understand what I'm saying? If say 5150 is a point on this chart where we have a very strong resistance. Now, if no news was there, maybe it will start falling from there and come back to the next level of support. But since the news is there, it may just accelerate, break through multiple supports and go somewhere. Now, we do not know where that somewhere is. We do not know whether it's going to fall going to fail 3 levels of support, or is it going to fail 5 levels of support. We have no idea about that, right? So the market will do what it will do. We have to find out what the market is doing and then decide what is the highest probabilistic move that the market will make, and then trade in that direction and take profit at a measured move target, right? Or at a swing high or at a swing low. That is where we have to take the profits. Now, if you look at what happened here on this chart, you can even say, if I remove this line, you can say, hey Sabuj, this was the first point where the market started to turning, right? It started to turn in this whole leg. So why not we draw the line from here and get the wedge? I would say yes, that is also a perfect wedge. But here lies a difference, okay? When you have a wedge, now see, after this touch, how many candles were there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 candles were here, right? After this touch, how many candles were here? 1, 2, 3, 4, 5, 6, right? So here is 16, here is only 6. This is telling me that this part is actually a channel and this is not yet a wedge. But remember, the top, during a bull run, the top line is still the wedge. During a bear run, the bottom line is still the wedge. But I will not consider that this wedge is going to be active right now and is going to fail. So what I'm saying is, you guys understood what we call a wedge, right? A wedge is a 3-point touch of a single line. And when we are talking about a wedge in a bullish move, we are talking about that line on the top of the structure. When we are talking about a bearish move, we are talking about the bottom of the structure. Correct? So if you want to see here, if I say that, okay, this started running from here. So this is a wedge that worked and we went back up, right? The wedge did not fail here. However, if you look at this, if we have this wedge, this is another wedge that is working, okay? But now you may say that, if you connect the line starting from here, then also we make a wedge. Absolutely, we do make a wedge. But what are we trying to say here? That number of bars that I was talking about, if you see here, from this touch to this touch, we have 16 bars, right? From this touch to this touch, we have 16 bars, and from this touch to this touch is 6 bars. So this is not making any sense here, right? If my first move had 16 bars and my second move has only 6 bars, this itself is telling me that maybe this is just the top of the channel line, which will also become the wedge line, but it is not time yet, right? So there are 16 bars here, there are 6 bars here between this one and two. Now I will say that, okay, this one, this touch and this touch are 2 touches. I am not going to consider this. Now since this is 1 touch and this is 1 touch, this is going to go up. At that point of time, if I see that there is one more touch happening here and then the market is trying to retract, I will say that, okay, these are now the 3 touches that have happened on the top side, and now there is a chance for the market to move down. When I see that these 3 touches have happened, I will take some part of my profit and I will wait for the market to revert back and show me another bullish move. Maybe we will want to move back up once again. However, after 3 or 4 touches on this wedge line or on this wedge line, the market normally pulls back a couple of legs in the opposite direction. Is it making sense? It makes sense, whatever I said. The definition of a wedge and how we say that a wedge is being formed and what point of time we will say that the wedge is where we will have to take profit. Now, say if this wedge breaks out, if this candle comes and maybe it closed somewhere here, you are still long. You are long from here. So this was your high 1, this was your high 2. You are long from here. You are waiting for the market to go up, right? Now, at this point of time, if instead of this candle, if we had a candle like this, where is my box? Where is my box? Here's my box. If we had this same candle like this, let me change this. Okay, so let's say instead of this candle, we had the candle come and close like this. At that point of time, we will say it's a wedge breakout. Now remember, whenever there is a breakout, there is a 80% chance that the breakout is not going to hold, and in the next few candles it will come back and prove that the breakout was a false breakout, right? However, we did not break out here. If we had broken out, now you are here. Where will you take profit? You have to know the place where you want to take profit, or where the majority of the market wants to take profit. What you will do here is, this leg started from here, right? The bottom of this candle. This leg started from the bottom of this candle, the low of this candle. But being conservative, we will start measuring from here. Okay, we will put our 1 here. We will put our 50% at the top of this candle where it closed. If there is a wick, do not consider the wick. Okay, do not consider the wick. Just do body to body. That is a very conservative way of measuring that I do. You can consider the wicks, but it may become a little bit more aggressive and you may not be able to reach the target and fall below that. So I do body to body. Yes, I do post my videos on the YouTube. Once this is done, recorded, all these will be there on the YouTube channel, and you can check out my other YouTube videos also, which have been some of these sessions. There have been some other sessions, so that is how we have done. Okay, so we are from we measured it from the open of this body to the close of this body. That is my 50% move. I am considering that as my 50% move. I am still long. I do not know whether this breakout will fail or continue. I know 80% of my breakouts fail, and if it does not continue, I am ready to cut my trade, right? And that will still be in profit because I started from here, and I do not want to lose any of my profit here. I know I have 1 touch here, I have 1 touch here. This I will not consider as a touch because there are so many candles in here. So I will actually wait for another touch, but in the meantime we broke out. Okay, so if it breaks out, if this is your 50%, this will be your profit taking area at 53.40. So there is no way to look at anything. There is no need to look at any other stuff. If you know where the market is doing 1:1, that is a wonderful place for you to take profit. Now, if you want to see if there was something that may prevent that from happening, or if you want to confirm that this is actually the profit taking area, draw this line and look to the left. See what happened here. See what happened here. This has been a consistent resistance in this area. It is actually kind of a head and shoulder structure, and we dropped. Now, if you do a measured move of this head and shoulder structure, let us say this is kind of the neckline, right? So if we say this is the neckline of the head and shoulder structure, and we start our measured move, again, I'm not considering the wicks. I am trying to be conservative. I want to take profit early, leave a runner, and that runner will maximize my profit. But most of my actual position should be out at the measured move target. So I start from here. This is my 50%, right? If this is my 50%, this is my 100%. As soon as we broke down, we went back and retested, we came back down, we got our measured move. We got 150% as well of that measured move, but that happened in a different leg. And this whole can be captured as a different measured move as well. If I say this was my leg 1 down, let us look at that measured move now. If I say that this was my leg 1 down, this was my leg 1 down. We won't use a fib here because there are different ways of measurement. This is a different way that it happened. This was my leg 1 down, right? And then we see there are 12.5 points, 12 and a half points here. Now, if we start from here, we got almost 1:1.5 again of this leg, right? But there is a high probability you will not be able to capture this because you are not going to short a big candle, big green candle, until and unless you know the concept of a body gap, right? So there is a body gap here. There was sideways movement here. And what did I say in my earlier classes? Whenever there is a sideways movement, we are actually creating an area of balance. Now, to break out of that area of balance, we need a strong displacement candle, and that is what this was. When this happened, we created the gap between the close of this candle and the open of this candle, and this is what we call as the body gap. Right? If you go to the ICT concepts, they will say that okay, this is the body gap. This is the fair value gap, right? Because they consider wick to wick. In price action concepts, we do not go by wick to wick. We actually find out body gaps. Correct. And now, since we decide body gaps, if you knew that the body gap may be rejected, you could have shorted somewhere here again, and you could have got this leg. But there was always a chance that this could even go up and not hold this. Right? Because we had 1 leg down, we had 2 leg down, we had 3 leg down, we had 4 leg down, we had 5 legs down here that day. Okay, so that is currently telling me that okay, this body gap held and we got another measured move to a new low. So at this point of time, this will become a point of resistance going forward. Let us see what happened going forward. Let us extend this to the right. Okay, and let us mark this as a sell zone. Okay, now we go to the right and we see we have not reached this body gap yet. So we will find that out when that comes. However, based on that, if you see what happened this region, let us move to the RTA chart. Okay. So here, where was I? Yeah. So what happened? Look what happened here. This was the close of Thursday, right? At 1:7. This was the close of Thursday at 1:7. Correct. And then this was the top that we had today, or right in the morning session, 25. Correct. So, and we see that we keep on bouncing between these two, but we keep on making lower highs, right? We keep on making lower highs. Now, if we say that this is the whole trading range that we are in, and see how this thing is coming down this channel. Right, we did not have to draw this channel separately. We are creating lower highs. Now if you see, this is a trading range, correct? Where is my box? This is a trading range. Now if the trading range breaks, what does it do? It does a one-to-one of the whole trading range. So if you want to say this is the one-to-one, where will the price go? The price came here. The price got 1:1 here. Now if the price wants to go back up again, I will take this again, Control C V, and I will put it on top of this. So if there is a breakout of this level now and it holds, for now it looks like it is holding. Now we will see at 6 o'clock what happens. This will be your profit taking area, right? So 8 points in this whole area, we got 8 points down. If market wants to go up, we will get 8 points here. But now you see this area, this resistance is coinciding with your profit taking as well. So when price comes to here, if you are long from here and you are waiting for price to come here, when the price reaches here, he post link scroll up. Okay, if the price comes here at that point of time, you will have to take some profit, right? You can leave a runner. It may also happen that this box gets replicated again and we go up to maybe 4-1. We may go up to this 4142 area. So now we have the, okay, why are we doing this? We are doing this because whole of Friday we had a TR. Correct? We broke down, we did 1:1 of the TR, we came back up to the top of the TR and we are trying to break out. Now say it's a continuous chart, there is no Friday, there is no end of day, there is nothing, it is going up and going up or moving in this range. We are just trying to structure the chart in a way that will make sense. Okay, this is for your own benefit. Why do we put support and resistance lines on the chart? So that we can structure the chart, we can enter a trade based on the support and resistances, and then we can take our profit at our next desired level. Right? That is how you want to structure a chart, and this is what the structure that I have made for the next 2 days, maybe before Powell comes and the FOMC minutes of meetings are out on Wednesday, and there will be high volatility in the market again in the afternoon, and then after that Thursday morning we will see, hey, now what is going on in the market, and that will create the actual move. Right? So FOMC will decide the direction, it may move in that direction, but then Thursday is the actual test of whether that FOMC move is going to hold or is it going to completely reverse in whichever direction it was, whether it's going to hold or it is going to completely reverse and give us some other targets in the opposite direction. Right? So this is how we find out what our support and resistances are. We find out how we get these points. We have our support and resistances that are drawn here on the 5 minutes. Along with that, what we also do is we keep it on the ETH chart. Now let me ask you guys, are you all aware of what ETH versus RTH is? No. Okay. So let me tell that to you. I see some new faces here. You may not be knowing. So ETH futures is a continuous market, right? From 6 o'clock in the evening to 5 o'clock in the afternoon the next day. So that is how the market runs. And between 5 p.m. and 6 p.m. is your settlement time. No one in the world can trade during the ETH hours on any between that 5 p.m. and 6 p.m. EST. No one in the world can trade because that is the settlement time for these instruments, right? So what happens is, say, let me open an Excel sheet, that will be easier to explain that, putting it up here. What happens is, say this is 6 p.m. everything is in EST. Okay, now this is day 1 and then day 2 9:30 a.m. again EST. Day 3 day 2 4:15 p.m. again EST, and then day 2 5 p.m. EST. Okay, so this whole time slot from 6 p.m. to 5 p.m. is the global time slot. Okay, and this 9:30 a.m. to 4:15 a.m., this is what we call as the RTH, or the regular trading hours. Okay, and this 6 p.m. to 9:30 p.m., this time slot is what we call as the ETH, or the extended trading hours. So whenever you are starting to trade an instrument in the morning at 9:30, make sure you are aware of the highs and the lows that the instrument made between the 6 p.m. and 9:30 a.m. Okay, that will give you the Globex high. The high of these between these two times is called the Globex high, and the low is called the Globex low. Does it make sense? So between the high between 6 p.m. and 9:30 a.m. is the Globex high, and the low between 6 p.m. and 9:30 a.m. is the Globex low. And then we have the RTHRs. Okay, so if that is the case, then you go ahead and rewatch them. That's not an issue at all. The videos are already there. Okay, so whenever you start trading in the morning, suppose this is Friday, right? Let me remove all the drawings now. Let me remove all the drawings now. So on Friday, let us see where the day started. This is where the day started. This is 6 o'clock candle, and then we are here at 9:30. Where is my 9:30 candle? Somewhere here. This is my 9:30 candle, right? Okay, this red bar is my 9:30 candle. So in this time, this was my Globex high, and this was my Globex low. On a typical day, we either break out of the Globex high and keep going, or we break down from the Globex low and keep going, right? However, if you have a tight trading range day like this, at that point of time, what happens is we can break the Globex low, we can come back into the balance area, and then we can go and break the Globex high. That is what happened here. You can pick up any day. So if you want to test things out, you can pick up any day like this, right? You look at this area of this candle, the wick of this candle, and then see what are the patterns that are forming, which is able to reverse the market up and bring it back here. Can you briefly explain the times? Didn't you say it was 5 p.m. to 6 p.m.? No. Okay, let me go back there once again. 6 p.m. to 5 p.m. is the total day. That's the global time slot, right? Now, if I do here day 2, 5 p.m. to 6 p.m., you cannot trade here. The global market is down. You cannot trade here. The day starts at 6 o'clock, continues 9:30 to 4:15 is your regular trading hours. The day ends at the market stops at 5 o'clock. After 5 o'clock, 5 to 6, you cannot trade. Again, the market starts at 6 p.m. EST. Make sense? Okay, let's move on. Okay, so that is how you find out your trading ranges, and that is how you decide, okay, what move the market is going to make next, and how it is going to move after that. So you take your profit level to level. That is something that you have to do. If you have entered here based on the understanding that, okay, it may go up till here, if that was your measured move, let's see if that was the measured move or not. Again, we will start from here, we will go here. Yeah, it was not quite the measured move, but again, this was the TR, and this is where we had resistance, right? So we got rejected at resistance. So if you see something like this, you should be coming out of this, of here. But then, yeah, we got the measured move later. But if you have entered here, your stop loss is not going to be here. If the market has given you already this much profit, your stop loss will be somewhere in the midway, right? So even if you're having a runner, you won't let the runner come down, make you $500 negative, and then go up again. That's not something that we do. Okay, give me 1 second. Okay, got it. So, okay, so let me ask you this. Did you understand what wedges are? Did you understand how we are getting these measured moves? Does that make sense? See, there will be multiple concepts that I will be talking about. I will be talking about measured move of each of these concepts because that is how the market moves. That is how the market takes profit. If you want to see here, we came up. Why is the market taking profit here? Because this was the top of the trading range. So you also have to take profit here. You can hold a runner, but you have to take profit here because you see every time it touches, the market is taking some profit. The bears tried to pull it down, but then we have this outside up bar, right? Let me remove the fibs. We have this outside up bar. So this is telling me that, okay, the market actually wants to go a little bit more up, and we broke through it. Now, when will we say that this was a false breakthrough or a false breakout? The point of time when a red candle will come and close below the low of this candle. That is when I will again short and try to come back at least here or to here to the 1:1 or 1:2 target, considering the fact that the transition to the next level of 8 points has failed here. Right? So that is how I will enter the trade. Or better even, you wait for a gap to form. For every movement, there will be sideways momentum happening. There will be sideways movement happening. The market will keep on staying in a sideways zone, in a balance area, as long as the balance area is not broken down and gives me a displacement. I always enter after the candle closes. Whatever my trade is, I do not enter mid candle, but I take stop losses at mid candle. I take profit at mid candle. I do not want to enter any trade before a candle has been completed, because think about this. If you're seeing this candle, right, as soon as it started forming and you see this a little bit strong, a little wick here. The candle was green at some point here, right? When this wick was formed, the candle was green here. You just entered long and then the candle collapses. What will you do now? There is nothing that you can do at this point. So since there is nothing that you can do at this point, it is always better to wait for a candle to close. If you wanted to go long above this candle, market order is not the way to go. You have to put a order one tick above the high of this candle. That is how you enter a trade. If you want to go short here, you will put a order below this, one tick below the low of this candle. If you want to go long here, you'll have to put it one tick above. You'll have to put it one tick above. Wherever you want to enter, you have to put it one tick above the candle. Right. Also, one more thing, if you see, we have a 1, 2, 3, 4, 5, 6, 7, 8, 9 bar micro channel. So when you have a 9 bar micro channel, it is good to assume, or it is safer to assume, that we may get a measured move up. Now, if you want to measure that measured move, you will again start counting at the same point. See, I do not consider any wicks. I do not consider anything here. Although bulls actually started buying from here, right? Bulls started buying from here. But I am going to consider only the body and stay conservative. Okay. Again, if you see, this is the, even if I don't consider that, okay, 5337 is the target of this move, and this, you never know, this may come at the open of the market today, right? So that is how we calculate the measured move for a micro channel. So if my leg one was so strong, we have one leg down, we have the second leg down, the market went up, this was my first leg up, second leg up. Now I am thinking that if this wedge, this wedge that we are having now, if this wedge breaks through, or actually it may climb up and get here, right? And if this wedge breaks through, then maybe we will have another measured move of that leg and come up to this 5345 area. So are you understanding how the market moves here? How the market keeps on moving from level to level? Your job is to trade level to level, and you have to take profit at those levels, leave a runner, and keep a logical stop loss for the runner. For example, if you have entered the trade here and you are still in the trade, you have taken profit here, right? Now you see you had two legs down. At this point, my stop loss will be somewhere here. Okay, when this has formed, one leg down, two leg down, we go up. Another, it tried to bring the market down again, but failed, and we continued to go up again. At this point, I will bring my stop loss from here and I will put it here, or maybe here. Okay, but and another thing that I do not do is I do not keep trades open overnight. I do not keep trades open when I'm not monitoring my trades. So whenever the day ends, I normally do not take any trades after 3 o'clock if I do not get a very beautiful structure that is forming and it's too enticing for me to sit back, but I will enter with a very small position. So I have created my own discipline. I do not trade before 9:30. I do not trade after 3 o'clock. Between 9:30 and 3, what I do is most of my trades happen between 9:30 to 12, and then from 12 to 1 I take my lunch break, I go and have food. I come back at 1 and see if I can get any move between 1 and 3. If I am in a move between 1 and 3, and if the move is continuing, I will keep on staying in that trade, but I will not initiate a new trade after 3 o'clock once I have come out of that position. Yeah, I always keep runners. Now you will have to decide. I entered with 2 or 3 contracts, okay, mini contracts. Now in your case, if your account size is small and you do not know exactly what to do, you enter with 2 or 3 micros. Okay, now the difference between mini and micros is your losses are lower, but your profits are also lower. But that is the best thing to do in order to stay in the market longer, in order to stay in the market without blowing up your account. So keep your position size small. That is why along with the mini, the micros have also been created so that people can stay on in the market longer, and smaller traders also will have the opportunity to make some money out of the market. Okay, so is any other questions in this area about whatever we talked about? Do you understand how wedges are formed? Now since you guys are here for the first time, I will also show you how you can predict channels. When you have a new low and you have a higher low, what you do is you take your trend line and draw this. Okay, this is your first trend line. See, I started from here, I attached it here. I already see that my trend line was correct. Okay, let me remove all the other lines from here, and then you take this line and paste it on the top. You got your channel here, right? See how you got your channel here. You just took this line, this was your trend line, you took the parallel line and put it on the top, and you got your channel. But at this point of time, when you were at this candle, you do not know the stop, right? I very conveniently put it here. I did not know what is going to happen. So when we are here, we are at this position of the chart. I have drawn my lower line. Now this line, actually I will keep it here because this is the high that I have right now. Okay, as we go through it, I keep moving this line and see where the rejection happens. Now the rejection happened. I know that, okay, this is my trend line right now. So that is how I predict my trend line. So let us look at another example. Let us look here. Okay, so this is one low, this is another low. So I will connect these two. Okay, now what I need to see what is at the top. I copy paste this line, and if I have these two levels now, I will take this line, which was my actual line. This was my actual line. So when I am here, I do not know what will happen in the future, right? I take this line, I see, can I connect, what can I connect most at this time? So this is what I found. And let's see, look, we did not know what is there to the right, but as soon as I projected this line to this, we got our channel. So that is how you predict channels, and the channel tops and the channel bottoms always act as your support and resistance levels. Making sense? Okay. Now how do we find support and excuse me, support and resistance levels in the higher time frames? Okay. Let us start from weekly. That's how I do it, right? Let's start from weekly. Once we start from weekly, we see that this was the weekly gap that we had, right? The body gap. Now we are above this body gap. So we are practically safe here. The weekly bulls do not see any chance of reverting anytime soon. However, this is my weekly order block. Okay, this is where most of the sale happened. We have closed above this. We have closed above this candle, but this can still act as a very good resistance area, right? 5334. And if you remember from that measured move exercise that we were doing, this 5334.5 was your target. So there is a big chance that the price will come here and will pull back for a couple of legs. So you have to take your profit here. Right, your profit has to be taken here. You keep on a runner with a stop loss. There is no harm in that, but take most of your profits in this area. So this is how I get to the weekly one. And if I talk about support, this is where I have weekly support. And if you see, we do have a gap here as well, and that is telling me that this is a good support, and this gap actually held on to this bearish move that we were having. Right now, if I say that I have 4 candles like this now, but this is the weekly chart. However, if I want to project it up, if I break out of this, if I break out of 3.5 and say this week we close somewhere here, this week we close somewhere here, for example, then we will say that, okay, if this has been the move by the bulls still have a chance of taking it to 5915. Now, these are far away. If you want to bank on these things, you will have to do with options, because if you are doing it with futures, if the market wants to come down here, that will be a 100-point drop. You are not going to hold on to a future trade for 100-point long, but if you have this options contract which is 6 months out, even if we come down here, this will hardly lose 10% of its value, because the time value is so great. And although this thing is so much out, we are 5.3 to 5.9, we are 600 points out. In spite of that, there will be very minimal loss in the option pricing, in the options contract price, because we have so much time value left in it, right? So even if we come down 100 points, this will still have some life in it. So if you're playing options and you enter the trade here when you are thinking that we are breaking out and we can get a measured move of this, your stop loss has to be somewhere here, or at least below this candle's low, which we are saying is the bearish order block that started this whole move. Making sense? Make sense, guys? Can you please put in the chat so that I understand that whatever I'm explaining is legitimately making sense to everyone else. Okay, that's good. So that is how we do measured move. You can do measured move in any way. Suppose, for example, let me see a different one. Okay, this one. We came down, we started from the bottom of this candle. We trapped all the bears here because the bears had sold here. So the bears got trapped here. Now, from here to here, this was the move. This was the first move up, right? Now let us see if we can actually get a measured move of this. And what happens when he reached the measured move? See, we exactly came to the measured move and the profit taking started. The market still had some juice in it. It kept on going up, but the profit taking continued. And then after this was, oh, we didn't, oh, see, this actually opened here. So this is my gap area. This is my gap area now, right? I have the displacement candle. This is my gap area. This candle could not close above the gap area, and we had two more legs down. Now, if you want to say that, okay, what happened to the measured move down? Let's see. We started selling from here. We sold till here. We got our 1:1. You see how the market moves? The bears will get their 1:1. The bulls will get their 1:1. If you say now, hey, but suppose these guys did not get their 1:1, they're completely lost. Are they? Let's see. You sold here and then you sold here again. As a bear, you sold here again. That is why we have these wicks. So if I draw my fib from 0 to this, we almost got to the 50%. Not quite, but the bears tried to get their 50% and then they exited, seeing that the bulls were not strong enough. This is telling me that the bears were trying to reach their 50%. They could not. As soon as this candle came up, see, as soon as this candle came above the 100% area, the bears tried again, they failed, and we went up straight. Right? So you have to keep on measuring, you have to keep on finding out the legs, you have to keep on counting the legs, you have to keep on looking for the wedges, you have to look for the balance areas, measure the balance areas, see how far up or how far down from the balance areas we are going, where we are bouncing, and these are the setups that you will be getting. However, if we now go on so that is how we do it on a weekly chart, right? Now, if we go to a 1 hour chart, let me remove drawings. If we go to a 1 hour chart, I will say this is support. Do you know why I'm saying that this is support? This is just one black bar in the middle. Why is this support? This is support because this was an attempt by the bears. Why am I saying that this is support? This is support because the bears tried to bring the market down. Maybe the bulls took profit here, that is why the market came down. Maybe the bears tried to sell the market from here and the market came down. Whatever be the reason, the ultimate thing is that the market came down here. That means there was bearish action. This candle crossed over that bearish action and broke out. That is why we are saying this is a region of breakout and this will be support once the price comes back here. Okay, now if you see between this candle and this candle, if I remove this structure from here, between this candle and this candle, this was a news bar. We have a body gap, right? And look what happened at the body gap. This was a sudden spike, pullback, and then we had another spike. Now, if you want to see if what happens here, you were saying that, okay, we had this spike, we had this one. Now, how far we will go up? If I want to go long here, how far we will go up? Simple. At least do this. You will get till here. And that is exactly what happened. And now see, this line became a point of support when they are trying to come down again. Now, once I have this inside bar, my first thought is this will be my first target. Looking at this is based on the 1 hour chart. Now, all these concepts are fractal. Whatever I'm telling you here, you take it to any time frame, 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 1 hour. All these concepts will work across any time frame. Okay, so this will be my first target. This will be my second target. This will be what? This will be the bottom of this. This is my bearish. Where is it? This is my bearish gap now. right? So this may be the first target. This will be here. I will take some profit here. I will wait for price market to come down, come here, and I will take some profit, and then I will raise my stop loss and see if the market is still going up, and then if it goes up, where is it going? So at that point of time, I will again consider this as a breakout of the current all-time high, and we will measure that leg, the leg that broke it out, and we will then project that same measurement to the upside to get the 1:1 of that leg. So that is how the market moves every day, every minute, every hour. Okay. Once you get an understanding of what a balance zone is, this created a balance zone here. This created a balance zone here. There were no gaps being created as such. There were no gaps being created, and as a result of that, the market was not moving anywhere. Now we created a gap. Right? Now we created a gap, we created support here, and we kept going up. So you'll have to look for these balance zones. Even if the balance zone is old, it does not matter. It was still a balance zone. If I look here, this whole area was still a balance zone. Every time they came back below it, they did not get a continuation. And finally, we got a breakout to the upside. You did not miss much. I am not able to see your full name. Yusuf, you did not miss much. Anyways, you'll have the whole thing. Okay, so you will have to find out these balance zones. This is a balance zone. And if you notice, markets move from one balance zone to the other balance zone, because that is where the market feels that the price is in a fair point. It is the fair price of that particular instrument at that given point of time. This may not be this will be the balance zone that we had. So we came out of this balance zone, we broke out, we created another balance zone, we broke out, we created another balance zone, we broke out yet again, and now we have a new balance zone here. You see how market is moving from one level to another. Think about water flowing. Simple concept. Think about water flowing. Forget that water goes by gravity. Think that we are somewhere where there is no gravity. The water is flowing from this level to the next level, from this level to the next level, from this level to the next level. When it will come down, we will follow the same path. And that is how the market will move. However, if the market is in a high bearish momentum, support areas gets broken very fast. There is hardly any time when the market holds at a support area. If there is a bearish momentum, it can come down here in 3 candles, in 4 candles, right? It took so much time and so much effort to go up. When it will come down, maybe 3 candle, 4 candle, maybe Wednesday when the FOMC minutes of meetings comes out at 2 o'clock, you will see 3 candles and it will be here. Then you will see, okay, what happened? Now you go back to the chart and see what happened. We had a balance zone here. We have a balance zone here. The market did not think this was a fair price area. They kept on selling and they brought it to this balance zone. And then you will see it chop around here. And then it will decide whether to go up or to come down. And then the market will take another direction. Okay. Is it making sense? You understand how we draw a support and resistance areas on the higher time frames. So you draw your support and resistance on the higher time frames. On the 5-minute chart, you look at the trading ranges. You draw your fibs. You have your measured moves. As soon as there is a confluence of these things in one area, you will know that's a strong point of support or resistance. Okay, that is how we look at support and resistance. Make sense? Wonderful. So I will stop at that today, and we will continue again on next week. The market is open. See, we gapped up here. Oh, nice timing. Nice timing. Now I will watch if it comes here. I won't trade now because I don't trade at this time of the evening. Okay. Yeah. So I have these sessions every Sunday at 5 o'clock, and if you want to join my earlier session, this is where I have my link on my Discord. Okay, my Discord server has no signals, nothing. There is only one of my friends who gives out some options signals, but my Discord server is primarily for education. I do not give out any signals or anything. What I do is, if you see here, I will give you a trade plan. I will give you the market structure that is happening. This you will have every morning, and this is only specific to ES. You will have this. Are you able to see my screen? Yes, you are. No, I don't think so. I don't think so. Let me go back there. Let me go back to our channel here and then. No, you cannot see it. Let me reshare my screen. I will share the entire screen now. So this, yeah, you should be able to see it now. So if you see here, I put my market structure analysis here. Under the market analysis thing, and then my trade updates contain my trade ideas, that what are the possible areas where I will take a trade, and then after I enter, I say I enter a trade. I do not give out signals to any people. Okay, there are no signals from me. I do not believe or trust in signals. The better way is, rather than handing over a fish to you, I would rather prefer you learning how to fish. As simple as that. And that will make your life much more pleasurable. Your trading experience will be much better when you do that. Okay, and then if you want to see here, this is, where is it? Do you see anywhere options by Joe? Yeah, this one. So this is where we get some of the Joe is one of my longtime friend and associate. We have been trading together for almost 5 years, and he gives out his option ideas here. So these are his call outs. Okay, but this is the only call out that you will get, and maybe after August there will be one more guy joining, but he will mostly be on the spy side of things. So he will come and give you all those ideas once again, right? So that is from a Discord perspective. Again, I post my detailed plan for the next day also on my Facebook page. This is my Facebook page here. Okay, so this is my Facebook page. So you could very well come and like this page as well. The videos are here also. I upload the videos. So the intraday moves are also published here. I cannot publish them on YouTube while I'm trading, but these are the kinds of intraday structures that I keep on publishing on this page. Okay, so if you're interested, you can come and like this as well. I mentioned it there in the chat as well. Okay, so we will stop with that today. Any further questions? You send me a DM. I will give you the link, or you will find the link under any of my YouTube videos. That is also fine. Okay, so let under the YouTube video or in the Facebook page also, the Parma link is there. Okay, so I will stop for the day here. I will talk again to you guys next weekend, and in the meantime, let me know if you need any specific topic or subject that needs to be discussed or you're interested to hear about. Okay, thank you so much, guys. See you next week. Bye.